Goldman Sachs saying that share buybacks have surged 80% year to date. CNBC's Bob Pisani is watching this uptick and what it could be for the year. Bob.
Hello, Michelle. It's not just a big year for earnings. You know, it's a big year for buybacks as well. Now, Goldman Sachs estimates that buybacks could hit a record $1 trillion this year. That's a rise of 46% from last year. Now, part of it is due to tax reform, but revenue growth has also been a big contributor. Here's the good news. August is the most popular month for repurchase executions, accounting for 13% of annual activity. That's according to Goldman. It's even possible this recent rally is partly fueled by those buybacks. The buyback blackout period has now ended for most companies because the quarter's mostly over. Not surprisingly, the tech sector in particular will benefit from surging buybacks. Tech has accounted for 40% of the year-to-date repurchase authorization. Now, here's the bad news. Not all buybacks are created equal. Don't think of it that way. It's the share count reduction that matters. And while some companies are indeed reducing their shares, Apple's the great example. They've been reducing their share counts outstanding by about 5%. Look at that, 5-year charts, share count reduction for Apple since 2013. But a lot of others are increasing the share count by offering new options to their management. Often at the same time, they announce the buybacks. So in the long run, it's a wash, and the share count does not actually go down. Pay attention to that. While the S&P overall saw a share count reduction in 2016 and 2017, so far this year, the total share count reduction has actually increased by 0.5% here. And so they take away on the back end, but they add on the front end by giving more options to their executives here. It's a little frustrating if you're following the whole game. Back to you.
Bob, when we consider the question of sector leadership that you and I discuss regularly to see where the next kind of stage of growth in the equity market is going to come from, has that been influenced, do you think, by buybacks already? Will we not have seen the sort of bounce back in bank stocks, for example, if not for buybacks?
Yeah, there's no doubt that tech has been helped a little bit by aggressive buyback programs from the tech companies. Apple's the really great example here, and the banks haven't had that. So, yes, to the extent that the corporate buying is the marginal buyer in the United States, that mutual funds, for example, are either neutral or net sellers, yes, definitely. The more companies that are in buying back their stock, the more influence it has on the market.